On today's episode, we are going to take a look at three SaaS companies that just reported earnings. Some of them are down big. The first one we're going to take a look at is DATADOG, ticker DDOG. Then we're going to take a look at ALTERYX, which is ticker AYX. And then we're going to take a look at CLOUDFLARE, which is ticker NET. So today's episode is going to be broken down as the following. First, we're going to start off and just take a look at the price performance, how they have reacted to the news after hours of their earnings, and then also take a look at a longer time frame of how much percentage have they returned to investors. After that, we're going to take a look at their future growth and see which one, if any, are expected to make money, are supposed to be profitable in the next upcoming years. What type of revenue growth are they expected to have? After that, we're going to take a quick look at the ownership. Who owns the company? Do we have any top insiders owning that company? Right? It's always nice to see a big insider or a big member of that company being a high holder of shares. So we're going to take a look at that. After that, we're going to take a look at just a quick overview of their earnings and some information on their balance sheet. Out of everything, I do believe the balance sheet can help us out determine how well a company is doing and take a look compared to its cash balance to see, hey, does this company have enough cash to continue? And finally, I'm gonna give my thoughts based on valuation on which company I think I would prefer out of all of them. And if you are new to my channel, if you are a long-term investor, if you like to learn about growth stocks, make sure to hit the subscribe button. And to all my returning viewers, thank you guys so much for all the support. I appreciate it. Make sure to hit that thumbs up. And if you guys ever want to get in contact with me, remember, feel free to post on the YouTube comments. I am very, very active. If not, you can find me on Twitter. I also have a Discord channel and a weekly newsletter that you can check out at josenaharo.com. All the information should be on the pinned comments or on the description. But remember, all of this is free. All of these are just my opinions. I am by no means a professional, so none of this should be taken as advice. Talk to a financial advisor before making any form of investing decisions. All right, so the first one we're going to take a look at is DATADOG. And DATADOG, like I mentioned, ticker DDOG, is right now after hours sitting at about $84, and it's down about 6%. Throughout the day before reporting earnings, it was down 4%. In the 6 months ago, this company was sitting at $47. So even with today's drop, this company still has returned about 80% to investors, to anybody who's picked up since April, right? Since late of April. So we can see it has taken a big roundup, and right now there has been some pullbacks. And this is something I talked about in my previous video on Fastly, on my video before that of Amazon, where I mentioned how analysts, those two were prime examples where they kind of gave this heads up of what was going to happen in the clouding. Amazon, when they reported earnings a week ago or 2 weeks ago, their AWS did not meet expectations of analysts. So that to me gave me a red flag and told me, hey, Jose, right now it seems like analysts might be overestimating the power of these SaaS companies right now, of these cloud companies. So it might be some time to take back. And it seems to me like I was correct at the moment. Luckily, I don't have huge positions in any of these companies. Fastly, I did add on a bit today. But now let's take and for you guys that don't know, DATADOG, you can see right here what they do. DATADOG is a monitoring service for cloud scale applications, providing monitoring of servers, database, tools, and services through a SaaS-based analytics platform. And for those that don't know, SaaS is just a software as a service, and usually these companies provide some form of service with a reoccurring subscription to their customers. So next, after this, we're going to take a look at ALTERYX, and ALTERYX is ticker AYX. Right now, it was also down for the day. It was down 5.4%, and I do believe a huge portion of that was Fastly's dragging the whole cloud and computer software SaaS companies down. And after hours, this one definitely took a big beating. It's down 18.65%. It has almost lost 1/5 of its total valuation in a matter of one day. So ALTERYX, this one is an American computer software company and is based in California with development center in Broomfield, Colorado. The software is designed to make advanced analytics accessible to any data worker. So that, to me, this one is a pretty cool company. And it's like I said, it's lost about 1/5 of its valuation. If we take a look at the price 6 months ago, it was sitting at about $137. So in today's price, looking at today's price, it's gonna be pretty much flat even from 6 months ago. Year to date, it is about probably 37% up compared to today's after hours movements. So ALTERYX, ticker AYX, is one I'm really gonna keep an eye on. Next, we're gonna take a look at NET, and NET is CLOUDFLARE, ticker NET. This is another American web infrastructure and website security company providing content delivering network services, DDoS mitigation, internet security, and distributed domain name server services. This one right now seems to be flat from where they finished, but it did take a wild ride throughout after hours. It dropped almost as much as 10%, and it has increased from there. All right, so now that we understand how the price and actually let's take a look at the past 6 months. So CLOUDFLARE has still returned over 100% to their investors compared to 6 months ago. So this one is definitely a kill. It's doing a killer right now. So now that we know their price movement, let's take a look at their potential growth. So first, let's start off with DATADOG, and that's what we're going to do. We're first going to do DATADOG, then we're going to take a look at ALTERYX, and then we're going to take a look at CLOUDFLARE. So DATADOG, first thing I want to mention is this company is a high growth company. For the next 3 to 5 years, it's expected to grow its revenue about 26.6% annually on average. So that means for the next 3 years, if you do the average of those 3 years, it will be around 26.6%. Some years might be higher, some years might be lower, but on average is estimated to be 26.6. This is faster than the industry, which is supposed to be 12%, and faster than the market, which is expected to be 9.4%. So DATADOG is definitely considered a high growth stock with strong revenue growth. Unfortunately, its earnings is not seeing that same type of growth. DATADOG is expected to not really grow its earnings that much throughout the next 3 years. And over the next 3 years, DATADOG is still expected to remain unprofitable. Like I mentioned, even though it is expected to be unprofitable, it is a fast grower. Most fast growers are labeled as any company growing more than 20% a year. And DATADOG beats that estimation. All right, so next let's take a look at top shareholders, and this is what I found pretty cool. The number 2 shareholder is this person by Oliver Pomel, which is the CEO and the co-founder. They own about 10% of the business. And another 5%, another major shareholder is Alexis, who is a member of the board, and he is also a co-founder and owns about 5.5% of the business. And this is pretty impressive. 2 of the co-founders hold 15% of the total business. That to me is a very, very bullish sentiment. All right, next let's take a look at ALTERYX, ticker AYX. AYX shows something better than DATADOG when we take a look at earnings, but let's start off with revenue. Revenue growth for the next 3 years on average is expected to be 23% annually. So this is going to be considered a high growth company as well. Remember, DATADOG was 26.6. ALTERYX is 23%, so it's not that far off. It's not that far behind the type of growth that DATADOG is expected. But look, this one is expected to grow its earnings by 111% on average for the next 3 years annually. So AYX is expected to be profitable within the next 3 years. That's something it beats DATADOG in, and it's still considered a high growth because it's growing faster than 20% per year. on average. Now let's take a look at top shareholders. The number one shareholder is is a person called Dean. They are the CEO and the co-founder. This is what I like to see, guys. I like to see when the co-founders, when the CEOs still hold a huge portion of the company. To me, that's a very, very bullish sentiment. They own about 11.7%. To be honest, I am liking AYX a bit better. They took a big beating, but they are ones that are still high growth. They are one with strong to be profitable in the next 3 years, and they also have a strong top shareholder insider. Next, let's take a look at CLOUDFLARE, ticker NET. Again, another one that's seeing a strong annual revenue growth. This one is expected to grow 25.7%. On average for the per year for the next 3 years. Unfortunately, even though it is growing its earnings are expected to grow at 24.5% on average per year for the next 3 years. Same like DATADOG, net is expected to be unprofitable for the next 3 years. But right now we know this is a high growth. So out of the 3 right now, only ALTERYX, ticker AYX, is expected to be profitable based on analyst assumptions for within the next 3 years. The other 2 are not. Now let's take a look at CLOUDFLARE's shareholders. Their number 2 shareholder, who owns 12% of the business, is this person called Matthew Prince. They are the CEO and the co-founder, and they own 12%. Again, another big shareholder and a big company, another company that's still owned by a huge portion by the top dog. Then there also is a Michelle Satlin, who is a member of the board and also the co-founder, who owns 3.2%. So the top 2 co-founders own about 15% of the business still. And that, again, that is a very bullish sentiment, right? When you see the owners still own part of the business, to me, it gives me, it should give a bullish sentiment that, hey, if they're the ones that created it and they still holding it, it means that they believe they'll still continue to grow. All right, so now that we took a look at their future growth and we took a look at their shareholders, let's take a look at how their earnings did. So first, let's start off with DATADOG. DATADOG did beat both in revenue and in earnings per share. Revenue was $140 million, and that's up about 68% compared to the same time last year. It did not beat by much. It only beat by about $4 million based on what was estimated for it. GAAP earnings per share were $0, which beat by 3 cents. DATADOG, even though they did give their guidance up for the full year, they expect somewhere about $570 million for the full year. Previously, it was lower, it was about 560, so they increased it by about 10 million in their guidance. But this is still pretty good. I guess what? So they beat earnings per share. They increased their guidance. People might be wondering why is the stock down about 8%. The only thing I can say right now is investors were expecting much more from this company. They were probably expecting a way bigger guidance. They were expecting a way bigger beat. And that's why the stock price has now plummeted, because it has not returned that type of results that investors really wanted to see. Next, let's take a look at ALTERYX. I don't know. One of you guys is gonna correct me on the comments. They did beat non-GAAP earnings per share, but they missed on GAAP earnings per share. Revenue was up only 17% compared to the same time last year. I can see why, right? Especially looking at a Saas company, why seeing only a 17% year-over-year growth can really push people to sell the shares. They're like, why can't this be like Fastly? Why can't this be like CLOUDFLARE, like DATADOG, who has seen over 50% year-over-year growth? This one's only seeing 17. So I do believe this is one of the major reasons this company is down. Oh, another major reason is they did give their guidance for the full year is below the expected. They mentioned guidance for the full year of 2020 to be around 460 million. The overall expected was somewhere around 505. So that's pretty far off from expectations, and that's another reason why we're seeing this drop here. Next, the last one we're going to take a look at is CLOUDFLARE. So CLOUDFLARE did beat on non-GAAP earnings per share, and it did beat on GAAP earnings per share. Revenue was $99 million for the quarter, and this was up 48% compared to the same time last year. Again, another one that I want to say, this one is pretty flat. I'm guessing investors were pretty happy with the results. All right, so next what I want to do is I want to take a look at their balance sheet. And here in the balance sheet, I want to do the first. First, I want to see how much quick cash they have. After I know how much quick cash they have, I want to see how much total debt they have. Not total liabilities, just total debt. And then after that, I want to see how much money are they burning per quarter on their operating activities. Then I can kind of see how much does this company have enough money to last for some time. So first, we're starting off with DATADOG. DATADOG here, if we start off, has about $206 million in cash and has about $1.2 billion in some form of assets that can be sold pretty quickly. So in theory, they have about $1.4 billion in quick cash ready to use. This is actually a lot higher than it was a year ago. So from 1.4 last year was about 700. So it increased almost twice the size. And this can only mean two things. Either they took a new debt or they sold some shares. They liquidized some shares. And here, if we take a look at their total liabilities, we can see they only have one long-term debt. And that's something that increased by about $600 million compared to the same time last year. And that's where pretty much most of the cash is coming in. So if they pay off their if they use their cash to pretty much pay off their total long-term debt, they would still have somewhere around $700 million left over. So now I want to see, is this company burning any cash? And that you would have to look at their cash flow statement. So DATADOG at the moment is not burning any cash from net cash flow provided by operating activities. It's actually profitable there. So this to me tells me one thing, that DATADOG has a great balance sheet to continue to work, right? Even though it's not going to be profitable for the next 3 years, it has enough cash to survive for sure. And that's not something I'm going to worry about. Next, let's do the same thing for ALTERYX. The first thing we're going to take a look at is, again, quick cash. They have about $607 million of short-term investments and about $128 million of quick cash. So in total, they have somewhere around $730 million of cash available to them. This is a little bit lower compared to same time compared to 6 months ago. 6 months ago, they had close to $800 million. I wonder where they used that money. But again, if you guys want me to do a more in-depth analysis on any of these companies, make sure to let me know in the comments. All right, so right now they have about $730 million of cash. Let's take a look at their debt. The main thing right now, they don't have any really huge debt. They have, let me see, actually I missed highlighted. So they have about $643 million of long-term debt and about $70 million of short-term debt. So close to $700 million of debt. So if this company pays off all that, they would have about $30 million left over. Next, let's take a look at how much money this company is burning at the moment. This company is burning about $13 million a quarter. So in theory, again, remember, the other is long-term debt, and this is long-term debt that doesn't have to be paid off for the next 12 years. And we can and if you guys want me to do more in-depth analysis, we can see how far along it is. But in theory, if they pay off those senior notes, they will only have about $30 million, and in theory, they would only be able to survive for about 1 more year with the amount of cash. But they wouldn't do that, and just based on the amount of cash they have, they'll be able to survive a long time. And this is the only company that is expected to be profitable within the next 3 years. But again, it does seem like DATADOG right now has a better balance sheet than AYX. Next, finally, let's take a look at CLOUDFLARE. And CLOUDFLARE, they have about Right now, compared to 6 months ago, they have close to $1 billion, a little bit over $1 billion of quick cash, where previously they had about $600 million. Again, we're going to see this is either some form of loan or they ended up doing some extra offering. So they have about $1 billion of cash right now. Let's take a look at their liabilities. Their liabilities right now, they only have a long-term debt of about $400 million. So we can see this is where pretty much most of that cash came from. Even if they pay this off, they still have about $600 million left over. And let's see how much money they're burning through their operations. Net cash flow operations, they're burning about $10 million, so close to $40 million a year. Again, they had about $600 million left over after paying off their total debt. So they have plenty of cash to survive, right? I'm not saying they are going to do that. It's just a really quick way to see if they have cash to be able to survive during their burning stages. And here we can see all three of them are good. ALTERYX probably has the worst balance sheet of all of them, but it's not bad, right? Just when we compare with the other two are a lot better. All right, so now that we saw everything, let's take a look at my thoughts. And I just created a quick chart to help me understand what's happening here. So let me zoom in for you guys. All right, so today we are taking a look at three companies. We took a look at DATADOG, AYX, and NET. But now let's take a look. Out of all of them, the only one that will be profitable within the next 3 years is AYX. Next, let's take a look. We mentioned they were all strong growers. DATADOG was growing at 26.6 on average annually for the next 3 years. AYX 23% on average annually for the next 3 years. Net 25.7% for the same timeline. So we can see they're all fast growers. Even though DATADOG is the highest, it's not that far off from AYX. So they all have strong growth. They also all have strong ownerships. Most of the top dogs are either the #1 top shareholder or the #2, and all hold over 10% of the business still. And all of them had a nice balance sheet. We saw that DATADOG and NET had a little bit better. So now what I wanted to do is I wanted to take a look at their forward price to sales ratio based on revenue that they are expected to get 2 years from now. And this forward price to sales ratio is already taking account. I did the liberty to make sure it takes account the drops that it has seen after hours. Right now, the most expensive one, if we're looking at price to sales ratio, is DATADOG. With the 33 price to sales ratio, even after this drop, based on revenue 2 years from now. That to me, it seems a little bit high, especially when we take a look at ALTERYX, AYX. This one is the cheapest one right now with forward price to sales ratio of 13.7 based on the current drop right now. This to me, I believe this one is an opportunity right now, right? This one is one that's going to be profitable within the next 3 years. It has seen very similar growth compared to the other ones. It has strong ownerships. So to me, this one it seems to be a diamond in the rough rocks. What's the saying? Diamond in the rocks? Is that the saying? But yeah. And then the other one is NET. NET is somewhere in between. It has forward price to sales ratio of 24.36. Not as high as DATADOG, but not as low as AYX. AYX is definitely one I am going to keep looking at, and based on if I have any cash tomorrow, I might sell off some few positions, and I think AYX is one I am willing to enter right now. So let me know, guys, are you interested in any of these three? Are you more bullish on DATADOG compared to AYX? Which one are you more bullish on? Let me know on the comments. And remember, if you guys want me to do a more in-depth analysis in any of them, feel free to let me know and I will. Make sure to subscribe, guys. I hope you guys enjoyed this episode. I really enjoy doing this, getting all this information like always, right? This is what I enjoy doing. I've been doing this for a few years now, so make sure to subscribe, guys. Take care and see you next time.